Hello, good morning, good afternoon, good evening, whatever time it is that you're watching this. Hope you've had a good week, or you're already into your weekend and you're enjoying it. So just thought I'd do a quick one of these. Okay, not done one of these for a couple of weeks. As you can see, fortnightly look at the markets. And I just think today was a really particularly good day to discuss this and what's been happening in the markets. And for those that really follow it a bit closely, you'll have seen that there was big, strong market growth yesterday off the back of some large corporate earnings. Okay, and I just want to run through that with you in a little bit more detail, help you understand what's going on. You just discuss it with me if you're not too sure, you want a bit more information, or you would really want to dive down into the details a bit more. Okay, so if you have seen, so yesterday, the S&P 500 was up 1.96%. NASDAQ, which is tech focused, was up 2.43%, Dow Jones 1.57%, and the Russell 2000 1.2%. Okay, American market, okay, strong market growth. Recession fears aren't so strong right now, and let's get into that a little bit more. So had a big wave of corporate earnings this week. So big tech, Alphabet, certainly, which is Google, but probably most importantly, yesterday was Meta, which is Facebook. Okay, they're looking to implement some more AI. Okay, and as a result, their share price was up nearly 14% yesterday alone. So seeing a lot of market sentiment come back. Okay, and people are looking to take advantage now of still relatively low markets because they think that actually this is going to happen a lot faster than originally predicted. I know we're now sort of 16 months into this since January last year, and the market's sold off massively, but it looks like things are starting to come back. Okay, it's been, I mean, the market has been in a bit of a rally for the last few weeks, still relatively flat, but it is indicating that there's growing confidence coming back into the markets. Look, people are looking at the profits, people are looking at dividend growth, and as a result, we're seeing money flow back in despite banking fears. Okay, and that's also something that we need to be wary about as we look to invest money. So, as I mentioned, fear of the financial system crisis has sort of faded. It's still there a little bit in the market, so just need to be a bit wary. And the way that we can get around that really is investors should remain diversified. Okay. And one of the ways, and one of the easiest ways to do that, is looking at multi-asset funds. Okay, so if you work with me, okay, we've definitely looked at, or you definitely have some form of multi-asset fund within your portfolio. Okay, we're looking at investing in a fund, okay, that invests in a range of low or uncorrelated assets. Okay, so, you know, for instance, what that might be is a range of sectors. Okay, you might have some exposure to energy, some bonds, okay, maybe even some gold or other commodities, some tech. And what we're doing is we're just taking the money and we're spreading it out and essentially trying to reduce risk, trying to capture as much of the market as possible. Okay, so we stop the downside, but also when it's going well and it's all, you know, we're in a bull market, it's going up, right? So that's one of the ways that investors can certainly try and take more advantage of what's going on. Okay, and you know, why, I guess, are those sort of happening? So the outlook right now for the start of May, okay, 3rd of May, is that the Fed are probably only going to be able to do a 0.25 interest rate increase. As I've said, there is still some banking concerns. Okay, and if you want to go into why the interest rate increases are key for banks, you can watch a previous video, okay, or you can speak to me directly. But it seems like there's only another 0.25 on the cards from the Fed. Depending on who you speak to, you know, there might not even be any interest rate increase. But I think 0.25 is definitely going to happen. We'll keep an eye on it. I'll keep you informed, and of course, as that information pulls through, I'll let you guys know. Okay, and despite some of the earnings that have come out, Okay, some earnings have come in a little bit more disappointing. However, it's not stopped investors from getting involved. Okay, investors are now starting to look at the next economic cycle. And if we've spoken recently, I've mentioned to you, it was 14 years since we last saw this happen. Okay, is this next economic cycle going to be 14 years? Is it going to be longer? Okay, so investors are already looking to that next point, and that's why people are getting in now, because they know it could be potentially the last opportunity to take advantage for the next 14, 15 years. Okay, and each time these cycles come around, central banks, governments, they learn more about how they can almost prolong it. Okay, and that's why, I've said it time and time again, now's the time to get invested. Now's the time to take advantage, particularly in the tech sector. Okay, there's still some recovery to go there. Despite a strong start to the year, there's still some fantastic opportunities there, and definitely let's have a chat about it. See what we can do to gain some exposure. Okay, just looking away from the US briefly, just going to touch upon the UK. So inflation in the UK still came in at a disappointing 10.1%, higher than expected. Okay, again, interest rates are going to have to go up in the UK. Bank of England, they're again taking the same line that the Fed is, which is they need to bring inflation down. And it's not happening. It's quite stubborn. It's sticking, is what we say. So again, just really key to keep focused on that. Just jumping over to Asia. Okay, Japan is experiencing really strong growth, a bit of volatility in the Japanese yen, and even in China. Okay, they're starting to open up, and you may have seen in the news that China are now saying that you don't necessarily need to have had a vaccine to fly there, and you may not even necessarily have had a test. So they're really starting to open up since there's zero COVID policy. So we're expecting some big economic growth in that part of the world as well. All right. Key is, okay, same thing I say to you all the time, remain diversified, spread risk. Now is definitely the time to be taking advantage. And if you want to get some more details on anything, please speak to me, reach out to me. You can get me over the weekends, you can get me in the evenings, you can get me early in the mornings. Let's get something booked in the diary, and let's take it from there. All right, brilliant. Thank you very much for your time. Thanks for watching, and I'll speak to you soon, hopefully. All right, cheers. Bye now.